So let's jump right into it. Recession risk has risen. Goldman finally admits, but sees a silver lining in the U.S. consumer market. So what does a recession mean? A recession is the definition of a recession is that it needs to be 2 consecutive quarters of economic decline as reflected by GDP. So right now, as of last quarter, there had been a decline of GDP. The decline is, I think it was like 1 point something percent. It was a fairly small decline, but it is a decline. I think 1.6%. So it needs to have, 1.4%. It needs to have 2 consecutive quarters of decline. That's considered already in a recession. So many times we are actually in a recession when people didn't even know about it, or it's too late to know about it because there's already 2 quarters of it already occurring. Does that make sense? So that people may have been having a sense of confidence levels, and they may not realize that we've been already in a recession. Now, there's been some periods of decline of GDP growth, but not like this of an actual negative GDP growth. And there's many reasons for it, right? I mean, think about the supply chain issues. Like even if people want to spend money, which people do want to spend money, they can't even buy goods. Number 2, you look at the cost of oil. It's very, very high and very material. That impacts people doing their summer travels upcoming potentially. If you take a look at flights, how much that may cost. So there's a lot of factors there. And of course, there's always the looming factor of how long the Ukraine war may take. And so there's all these things that have been impacting not just the US, but in terms of the global markets. You have China that has a COVID zero policy. That's not going to help any of the production for US consumers. So, but there are silver linings. Like the fact is, the consumer market has been very strong. This because of the stimulus program, amongst other things. This left the average American in a very strong financial position. They have the most, as you can see, the most financial surplus in a long time. Boasted financial surplus worth 4% of GDP in the fourth quarter of 2021 compared to 2.8% average from 1985 to 2019. So the fact is there's some silver linings, but who knows what this may change. The consumer side on the US side has been very strong. It has been very positive. However, because of the supply constraints, they don't have the ability to even spend it. Now, as things get impacted, the question is moving forward, will there be a negative impact of consumer confidence so that they don't want to spend anymore? But from a financial perspective, it's been very, very high. Take a look at your own finance. Take a look at other people's finances. It's been higher than ever. So there is a possibility that even though there's a recession, and there likely is from all these economists, the question is, what is the real impact? Is it a massive correction? Is it a tank? No one will really know, and I'm not trying to predict these things either. It's impossible to predict them. The question is, there's the possibility of it, and there's also a possibility of a soft landing. Because take a look at these figures when it comes to real estate. So here was the last, obviously the last major correction was back in the real estate bubble. But let's take a look at these other ones, how recessions affect housing prices in the US. So here are the last notable recessions. And you can see how it has actually impacted real estate. So the last recession was a real estate caused bubble. So it was caused by faulty mortgages and products that allow people to buy homes when they shouldn't have been buying homes. So you can see the big decline there. And it can actually continue to decline through, as you can see, kind of the 2012 figure. So it lasted a very long time because it was unraveling a lot of things for housing. But if you look at the previous recession, let's say the tech bubble. The tech bubble lasted, I think it was 2001 February to maybe about a year. You can see house prices did not actually decline at all. It actually continued to increase. If you look at 1990 to the 1991 recession, prices stayed relatively flat. To be fair, if you look at the last recession was because of COVID. So if you look at like the 2020, certainly obviously didn't impact anything at all there. It just made it explode than anything else. And so it's also important to note, like, does home prices actually get impacted like when the economy is in the recession and or there's negative GDP growth or there's a negative impact in stock? And the answer, as you can see, is not necessarily. And so it's something to be mindful of, right? Stocks are a leading indicator on one end if you're looking at 6 months out. At the same time, it's much more liquid because you can short stocks, right? You can go even more leverage on the other end versus real estate. You can't short real estate, right? Now in the past they had like mortgage-backed securities, but that's a completely different thing. But in general, you can't short like a house. And also people's stickiness of a house is much more significant because they'll likely clear and sell other stocks and other things as a means to keep their house if things really got that bad. So those are just things to be mindful of, like how does it actually impact real estate, because they're two different things. Nevertheless, we may very well be in a recession soon. We won't know until about the end of the Q2 quarter. So there's still time to determine that. It's not unlikely. The question is it a hard landing or is it a soft landing? Contractions and expansions are normal, right? Having a contraction is a good thing. It cleans out all the bad apples and people that are going too crazy with things. You can see inflation is out of control. So it's good to hone that back in. And so recessions doesn't mean it's a bad thing. It just means it's a contraction. That's all it simply means.